Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 24, 2021. I want to cover heavily shorted stocks. Shorting a stock means you're borrowing a share that you don't own, hoping share price will fall. A short squeeze occurs when many investors borrow the share, but starts going up. So with that, let's look at a couple of stocks here, heavily shorted stocks, and take it from there. So these are the list of heavily shorted stocks. We got here Blink Charging number one here, and Clovis Inc. Oncology number two. The list goes on. So we'll look at some of these shares stocks in a little more detail and take it from there. So here is the list, in a little more detail. Top of the list is Blink Charging, as you can see here. Share price is around 37.59, and they got very nice growth here. They got revenue or sales $6 million, revenue growth 9.50 for 1 year, and sales growth of 257 quarter over quarter. Nice gross margin. From a valuation perspective, it's a little pricey, as you can see here, a very high price to sales ratio. And one thing I like about this at this point is the institutions are buying it right now. And I think insiders are selling. Probably there is some lockup expiration or something along those lines. But institutions are buying it. That's a good sign. And the RSI relative strength index is below 50, which means it's good time to buy. It's not oversold at this point or overbought at this point. So RSI below 50 means it's good to buy. It's not that high at this point. So with that, short ratio is 44. And if you look at performance itself, in 1 year, stock has gone up so much, 2,000%. But if you look at the quarter, on a quarterly basis, it's 15% negative. On a monthly basis, 7% positive. And 2 weeks, it's 14% negative. So I think, in 1 week, it's trying to recover a little bit, as you can see here, 3.24% higher in 1 week. So I think at this point, there is a chance this stock can go up with the heavy short ratio here, 44%. Stock is trying to recover in a 1 week time frame. There is a chance this can go higher, and any good news will cause a short squeeze. Number two is Clovis Oncology, $6 stock, and market cap is also very less, 649 million. And if you look at performance here, from a growth perspective, they got 10% growth quarter over quarter, and nice gross margin, 74%. And if you look at the performance here, 1 month, from a 1 year negative, half year positive 10%. And as you go through 1 month here, again negative, 2 week negative 2%, 1 week positive. So I think at least there is some recovery here. If you look at quarter, month, 2 week, all negative, but in 1 week there is some positive, in the stock movement. So with that, I think there is a chance this can also go higher. As you can see here, institutions are buying the share. There's a positive 6.71% from an institution buying perspective. So I feel like, with the low price to sales ratio of 3.7, 3.95, there's a chance this can cause some, short squeeze, and stock can really go higher, because still from a 52-week high it's down 45%. That's a good room to grow for this share. Next one is Nano Dimension, NNDM. Very low stock price, as you can see here, and for 1 year it has performed very nicely, 889%. For half year it's 98%, but if you see quarter, month, 2 week, all negative. So there is some improvement now in a 1 week. So I think it's probably a good time to load up on this stock also, given very low share price. And this company is also doing some acquisitions and improving their technology. And they do have some sales, very less, $3 million. There is a gross margin, which is good. Only negative thing about this company is valuation perspective, it's really high, 530 per 30. So, from a price to sales, that expensive, you got to be careful. But I'm bullish on this because, company has been doing nicely. They're into 3D printing. And I think it's really, good stock, but beaten down at this point. Next is Clover. As you can see here, Clover has been down 14% for half year, and they've been down for quarter, month. 2 week it's positive. Now it's down a little bit, and they have a good sales growth here. Quarter over quarter sales growth 66%, which is good. So with that, I feel this is also because it's a low price stock, and it's really there is a growth here from a quarter over quarter perspective. There is a chance this can also go higher. Only caveat here is they don't have too much sales. That's the caveat here. Then we got Petco Health. It's again, I think nice sales growth here, and nice 1 year growth and quarter over quarter growth. Nice gross margin. And here also, as you can see here, they're down for the quarter, but they're up for 1 month, up for 2 week, and even up for 1 week. So I think at this point, looks like probably some of the short squeeze already happened by looking at the performance here, but they're still down, 21% from 52-week high. There is a chance this stock can do well because fundamentally, when you look at the sales and the revenue growth, there is a good revenue growth. Irrespective of the short squeeze or not, fundamentally company is good. So I think it's good to buy some and take it from there. Next is HUYA. As you can see here, it's a Chinese company, and these stocks have been beaten down pretty drastically of late. As you can see here, it's a 49% down from 52-week high, and down for the half year, down for a quarter, down for 1 month. As you see this pattern, it's down for half year, down for quarter, down for 1 month. But now there is a improvement in the share price in last 2 week and 1 week. You can see there is a chance this can create a short squeeze because now it's waking up and stock price is going up slowly. Of course, you have to look at other things like volume as an example and see how price and volume are moving. But I think this is a good sign for you to take a look because share price is improving on a 2 week, on a shorter term basis, even though it has fallen drastically in the longer term. And if you look at this here, institutions are buying. That's a good sign. As institutions are buying, institutions like to buy when the shares are down. So I think it's a good sign here. And I will not cover all these things. You can look at this. I've color coded, stocks where we got good gross margin or good quarter over quarter sales or year over year sales. Just to make some points here, I think AMC is the recovery play stock at $10. I think there's a good chance this can also go up. Same is the story with the GOGO and Tattooed Chef. And you should pay close attention if you're buying a stock from an entry position perspective. Make sure RSI is typically lower. For example, if RSI is higher, say 60 or higher, I would not buy at that point. I would be a little bit careful. For example, Petco, I think this is still okay. It's a good fundamental, but normally if the RSI is higher, say 65, 70 or so, you can wait a little bit for the stock to cool off a little bit. And if you want to buy the stock, you should also look at the insiders, what they're doing. If the insiders are selling a lot, and institutions are also selling, then it's not a good sign. But if institutions are buying, for example, here we got BLNK and Nano Dimension, and even this one here, AMC, institutions are buying AMC, as you can see here, and even IPOE, Tattooed Chef. So as institutions are buying, you can basically think through because they're buying, there's a good chance the stock will go up. So this is one of the positive things that you can look at. Next, we'll look at a couple more here. We'll not go into a lot more detail here, but same story. I would like the stocks where there is a positive revenue growth, as I highlighted here, And typically, I like to see where the price to sales ratio is a little bit lower, at least lower than say, 60, 70. The stocks like Nikola and Arcimoto, I think there's a high price to sales ratio. I would only buy when they, fall drastically, so that way I don't burn myself. But I typically look at RSI. Some of these stocks, I think RSI is pretty low, which is, if it is pretty low, then it's okay to buy some and take it for keep it for long term. And I also look at insiders here as an example here. Arcimoto, there is a very high institution transaction. Institutions are buying it. That's a good sign, And even Nikola, I think institutions are warming up to Nikola also. And as you can see here, we got Kingsoft, Car Parts, Velodyne. I think I love this stock also. It's been down drastically off late. It's a good stock. It's into autonomous driving type. They're into some of those sensor technologies. I think it's also a good stock. And institutions are buying it. That's a good sign. And even here, Danimer Scientific, I think institutions are buying it. 73% up transaction. That's a good sign. So typically, if you look at quarter over quarter sales, insiders, even insiders buying, institutions buying, that's a good sign here. So next, let's look at a couple more here. Walmart, good sales growth. Stock has fallen down. I think now they're trying to recover, as you can see here. For 1 year, they're up only 0.09%. As economy reopens, I think this stock has a good chance to go higher. And then we got skills. I think this has fallen down drastically, as you can see here. It's down for 1 month. Now it's trying to recover, as you can see here. I think there's a good chance. This is a good stock. I would be a buyer of this stock. Any good news, it'll go up. Then we got here Caro Pharma, same story. Very nice sales growth here. And I would be, a buyer. And typically, as you can see here, in many cases here, skills institutions are really loading up on it. It's up 123% here. And Lemonade, I think institutions are buying Lemonade. Lemonade is one of those, insurance play in the internet, digital insurance play. I think because the institutions are buying it, I would be a buyer here. Same story with Alto. Alto also institutions are buying a lot, and same is the story with Lordstown. Lordstown, it's into EV, electric vehicle play. Stock has fallen down drastically, but institutions are buying. That's a good sign. And same is the story with the Cinemark here. It's a reopening play. Institutions are buying it. And Insigo. Insigo is one of those fallen angels. This used to do very, very nicely in the past, but now, as you can see here, institutions are selling a little bit. Insiders also, I think they have sold a little bit. But nice, sales growth here, as you can see here. Nice price to sales ratio. There is a chance, this can cause short squeeze. Earnings are around the corner. It's next month. I'm a buyer of Insigo, because it's drastically beaten down because of their, issues. I think now they're trying to recover. I think it's a good stock to, load up for the long term. Then we got Call of Pharma, same story, nice sales growth. I think it's a good one too. The story continues. You got more here. I will not cover them in detail. You got the idea what to look for. Look for institutions buying. Hopefully, if you can spot some of these insiders buying, that's a good sign. And you want to make sure price to sales ratio is a little bit, not too high. Make sure RSI is lower than 65 or so. I think most of these cases RSI is low. So with that, let's jump in. Next one here. As you scan through this here very quickly, I see Candy Technology, very high institution transactions. Institutions are buying it. UAVS, I think this one, Ag Eagle. Stock has fallen down off late, but it's recovering nicely now. A lot of institutions are buying it. That's a good sign. Same is the story with the NVTA, and Vuzix Corp. I think there is a huge inside, institution transaction. That's a good story. Um, so I don't see anything here that where insiders are buying drastically, but I think we should focus here probably on the institutions. RSI perspective, I think we are good here. Some high valuation, I would watch out for those. So that way, you buy those when they're down, not when they're up. With that, let's jump into one more here. Same story, I got some stocks here where there is a nice quarter over quarter sales growth or year over year sales growth and good gross margin. I'd be buying those and I would watch out how it's doing on a quarterly yearly basis. So whenever it's kind of recovering, slightly showing some improvements, for example quantum scape, even though it's down a lot now, there's a sign of improvement in a 1 week chart. I would be buying quantum scape as an example because it shows some sign of recovery. um, and as you can see here, academy sports, same story. I think this has gone up a lot now, but as you see recovery in a 1 month 1 week, but it's gone down drastically before. Those are your cues that there is a chance this stock can go up. So with that, let's look at a couple more here. Future holdings. I like this stock. It's been down off late, 8% for 2 weeks, 1 week 6%, but nice sales growth. I think these guys are into stock trading type business, doing very nicely. The real these guys are into, I think, authentic second hand type merchandise. I think they're also doing kind of okay. Their quarter over quarter sales is down, nice gross margin, but as you can see here, they're down. They're down for the 1 week, 2 week. They're up for the month with the high short ratio. There may be a chance this can also go up. So with that, let's go into few stock ideas here and see how we can spot whether to buy or not when there is a high short ratio. So with that, first one is blink charging. As you can look at the stock chart here from TD Ameritrade, Thinkorswim, very nicely, it's in the mid band of Bollinger Bands here, trying to go above. So anytime you see a stock that's bouncing off of the lower band, trying to go above the higher band, that's a bullish sign because it's trying to use the lower band as a support, trying to go above the higher band. And from a RSI perspective, it's 45, so it's a really, or 48, which is a low RSI. Stock is trying to gain strength. RSI is going up, meaning stock is trying to gain strength here. As the stock chart goes up and the RSI also goes up, that's a good sign. On balance volume, showing a good, steady growth here, meaning people are buying this share. So with that, I think the blink charging, even though it's a high short ratio, there's a very good chance this stock will cause short squeeze and this can go higher. And there are some news here, why gas stations of the future might not include EV chargers yet. Blink deploys IQ 200 charging stations. I think they got some good news here, which is a good story. And we should also look at the how stock is doing on a daily basis if you want to buy into a short squeeze type scenario. As you can see here, this is a daily chart of the stock. On a daily basis, on 23rd, it went up by 6%. The volume is higher. Volume is 2.64. 22nd, a day before, it went down. Volume is 3.10. And as we can see here, whenever it's going up, there's a good volume here. And whenever it's going down volume is also good. So by looking at this, you can make a kind of sense here how the stock might do. In last couple of days, as you can see here, more up days than down days. And I think a week before we had bunch of down days here. So it will give you some indication on price volume, like an order flow. If the order flow is positive, there is a good volume. That's your cue that hey, this rally has got legs. And if you look at the weekly chart here on a weekly basis, company has been, I think, 11th April, the week of 11th April, stock fell off so much. Now it's trying to recover some. So as you look at the pattern here, whenever they fall off drastically, for example, 21%, 16%, I think this could be, around their earnings potentially, but they recovered. So whenever they fall down drastically like this, you can be assured there's a bounce back coming down your way. So a little bit longer term, it's a weekly chart here. It's negative, trying to bounce off. On a daily chart, it follows the weekly chart. So if the weekly is trying to go up, daily also you can think of, it will also go up. Then we should also look at companies, fundamentals. As you can see here, nice sales growth, 1 year, quarter over quarter, good gross margin, a little bit high on a price to sales or a valuation perspective. And institutions are buying it, as you can see here. That's a good sign. Stock is up so much for 1 year, but down for the quarter, down for 2 weeks, now trying to recover. So these are some signs that you can read into and make your decision. And if you look at from a technical perspective a little bit, or a techno-functional perspective, institutions ownership is still low for this stock, 18%. Operating margin and EBITDA margin both are negative. Net margin is negative. Earnings is also negative. Company not making any money at this point. They got good amount of shares available, so you don't expect a huge run up because they've got so much shares available in the market. So there is enough stocks to cover the short positions here. And I also look at IV percentile. IV percentile will show you is it what the IV on an average 1 year basis. IV is low. When the implied volatility is low, if you're an option trader, you could really buy a call option, maybe delta 70 or higher, because IV is low. IV is low, you are not paying too much for the option. And we also have implied volatility itself, and historic volatility. So I would not be paying too much attention to implied vol and historic vol. I would look at IV percentile. Since it is down, even if you want to buy some call option, you can do that. And one thing you got to be looking at is earnings date here. Earnings is coming in 2 weeks or 3 weeks time period. So I think if you buy some call option, and or even if you buy a stock, this earnings can cause stock to go up or down drastically. By looking at the blink here, couple earnings, one earning here, stock kind of traded sideways and went up. One more earning here, stock went up drastically. So as we see here, when the Bollinger Band is getting tightened up a little bit, and if the RSI is really on a uptrend, that means there's a high chance this can go up. So right now, as you can see, your Bollinger Band is not too wide, not too narrow. So I think at this point, maybe it will try to go a little bit higher and bounce off between the higher band and the middle band. So with that, let's look at one more stock here. We have Clovis Oncology. As you can see from the chart here, nice looking chart, bouncing up and down. And right now it's trying to bounce off of the lower band of Bollinger Band into the middle band. Right now middle band is acting as a resistance level. I can see this going above the middle band. As you can see, a stock has sold off drastically last couple days here. Now there's a chance this can go above the middle band and make its way above maybe hit the upper band also. From a news perspective, as you can see here, they are announcing first quarter results on May 5th, and they also have some virtual annual meeting. There is nothing significant here, but I think overall you can see there is not a huge news here for this stock. But if you look at the daily chart here, on a daily basis, stock is kind of bounced off last 2 days, as you can see here. And the volume is also nice. When it bounced off here to $6, volume is 4.18 million. As stock bounces higher, if the volume is high, that's a tell, that means the stock wants to go up. But if stock bounces on a low volume, that's a tell that stock might go down. And if you look at the weekly chart here, last 2 weeks, 11th of April, 4th of April, these 2 weeks stock got sold off drastically, now trying to make a comeback. I think this can, have a good bounce back from this drastic low. So you can look at the weekly chart as your, outlook, or a little bit longer term way to look at it. And in the guidance of this weekly chart, you can make some moves in the daily chart. So in this scenario, weekly chart sold off like last 2 weeks here. It's trying to bounce the last week. Whereas here, the daily chart, you can see, okay, it's trying to make a move up here, which is a good sign. And as you look at the fundamentals here, stock is down 34% for the year, and it's down for quarter, 1 month, 2 weeks. In the 1 week chart, it's trying to go up. That tells you, there are it's down for quarter, 1 month, 2 week. Now it's trying to make its move up and bounce back and get some of those lost value. And from a short ratio, we talked about it, very high short ratio. Institutions are buying it, which is a good sign. RSI is low, so it's below 50. So even if you want to buy some call option, you could do that. Sales, it's a nice quarter over quarter sales and gross margin. That's good. Price to sales ratio, from a valuation perspective, it's not expensive. And with that, if you look at techno-functional perspective, institutions are buying, there's a good ownership here, 50%. Operating margin, EBITDA margin, net margin, all lower. Company is not making money. They're actually losing money, as you can see here. They got a lot of shares available here. So whenever you have a lot of shares available like this, it may not cause a huge short squeeze, because there is shares available for folks to cover their short position. They got a good amount of cash. They do have good debt also. And IV percentile is 8. That means if you're an option buyer, you could buy this option without paying too much money. But since the stock itself is very low price, $6, I would not buy options here. I would buy the stock outright. And put call ratio is 0.11. That means more people are buying the calls, more people are betting the share will go up, which is a good story. And earnings is coming just around the corner. May 5th is the earnings, so you got to be careful. I think with stock fallen off drastically, it's okay to buy some. And if you look at this company's earnings history, earning here, stocks went up drastically, hit from middle band of the Bollinger all the way to higher band. Here, stocks sold off before the earnings and tried to make some move up here. Same story here, stock fell off before the earnings, went up. Same story, stock fell off before the earnings, went up. Now it's already sold off here. There's a good chance this also can cause some upward move towards higher band, here around $7.17. So with that, I feel like, hey, it's good to buy on a down day and keep it. And I also see on the balance volume, it's really went up so high. This could be a short squeeze scenario. On this day, stock shot up, as you can see here, but now it's come down. So this can give you one more squeeze like this. There's a very high chance it can go up. Next, let's look at Nano Dimension. It's a 3D printing play based in Israel. As you can see here, as you look at this chart here, Bollinger Band got tight here. As the Bollinger Band got tight, RSI was trying to make its way up here. Stock shot up a little bit, which is a good sign. Now also you can see Bollinger Band is trying to get tightened a little bit. There is and stock price is kind of moving up. RSI is also showing some sign. This can tell you, because Bollinger Band is tightening up, RSI wants to go up, on the balance volume wants to go up. There's a good chance this can cause a short squeeze because of these technical indicators. And if you look at the news itself, Nano Dimension closes the acquisitions of machine learning, deep learning leader I think that's a good sign. These guys are really want to improve their technology. They're not afraid to buy some of the companies, and they also have some cash. They got some money through some of the debt offerings. They do have some money, and they also they're hosting some investor update. That's good. I think main news series they're buying this Deep Cube company, which is into artificial intelligence, machine learning. And if you look at the daily stock order flow here, 23rd of April, stock went up by 3%, 12.31 million volume. So that's I think that's a good volume here. And if you look at the weekly here, stocks sold off like last 5 weeks or so, as you can see here. Now it's trying to bounce off. I think this bounce off has got a leg. So since the weekly is bouncing off, and daily is also trying to take a cue and trying to bounce from there, I think this can recover some of these weekly losses here. Now that it acquired a machine learning company, earnings is around the corner 512. I can see this stock going up. And if you look at the earnings here, earnings here, stock went up, earning here, stock went up, then went down. I think, because stock is down drastically, there is a chance, this can go higher. And if you look at fundamentals here, or techno functional here, we got institutions are buying this, institutional ownership 11%, not too much. Company is still losing money, as you can see here. EPS is 1.33 negative, and a lot of shares available. So it may not cause a huge squeeze because there's a lot of shares available, 248 million shares available, but you can expect stock to go up because normally stock which came down so low, there is a chance it will go higher. And volume is good, nice volume. IV percentile is 50. So because IV percentile is 50, if you're an option trader, you don't want to buy call options at this point. You want to wait for IV to come down a little bit, below 50 percentile. PC ratio is high, meaning there are a lot of people buying call options. People are betting this stock will go up. That's a good sign. And earnings is coming up around the corner, 5/12/21. So with that, let's look at one more here, Clover Health. Clover Health investments, as you can see here, it's kind of trying to bounce off into the higher band of Bollinger Band. It tries to go, pierce through this, higher band. It's using the middle band as a support level at this point. It's had a huge short squeezes. I think last couple days ago here. That's a good sign. And RSI is trying to go higher or trying to stabilize here. And if you look at news here, they're announcing their financial results on May 5th. I think they got some virtual annual meeting here. And I think option traders are betting big move. That's a good question here. If you look at the daily trading volume here, I think stock went up on 23rd on Friday. Good volume here, 12.25 million. That's a good sign here. Stock sold off on 22nd. Good volume again. And if you look at a weekly chart here, last 2 weeks, 7% high, 11% high, but previous 3 weeks stock got sold off. Now it's taking a little bit breather. I think there is a chance this stock can go higher, especially because it's taken so much beating last couple of weeks. There's a chance this can bounce back a little bit. And if you look at the fundamentals here, Clover Health stock price is 8.77 on a weekly basis, negative 1 week, 2 week, 1 month, and a positive quarter and year negative. So with that, there's a chance that this stock can bounce and cover some lost ground in the quarterly and half-year basis. It's down almost 50% from 52-week high. I think there's a good chance this can go up because it's down so drastically, and it's got a good quarter-over-quarter sales growth, and the valuation is also very low, 4.3%. And from a techno-functional perspective, as you can see here, institutions are having some good amount of stock here, and operating margin, EBITDA margin, net margin, all negative, meaning company is not making money yet. A lot of shares available, as you can see here. It may not cause a huge spike because they do have good amount of stock available at this time. They have good amount of cash and a lot of debt, as you can see here. But with the IV percentile so low, even if you're an option buyer, you could even buy call option. You're not paying too much. PC ratio, put call ratio is 0.11, meaning there are more people betting in the options market. This stock will go up. That's a good sign. Earnings is around the corner, 5 within like 2 weeks or so. I think if you look at last earnings here, stock sold off before the earnings. After the earnings, stock went up. So there's a chance this time also stock may go up after the earnings. We'll see. Next, we look at WOOF. WOOF is Petco Health. As you can see here, Bollinger Band started getting widening out a little bit. Means stock is getting a little bit momentum at this point. It's trying to see if we can use this upper band as a resistance level right now, or support. Is trying to decide at this time. I feel like this also can go up. This can be, the upper band might act as a resistance, and it can go higher. I mean, yeah, it can be a support level, and it can even go higher. And last couple days, I think volume is pretty good. As you can see here, on the balance, volume itself is kind of getting stabilized at this point. And from a daily trading volume perspective, as you can see here, huge volume, 1.9 million shares traded when it was up 0.04%. I think overall, I feel like there is a lot of volume, and whenever on the down day, you can see the volume is much higher here, 2.293%. And on a weekly basis, you can see here, last couple of weeks, stock wanted to go up. And it's on an upward trend, as you can see here. The long-term weekly chart can guide the daily chart, so that's why I feel like in the daily chart, there's a chance it can go higher. And if you look at the shares outstanding here, this company is trying to make some effort to reduce their shares outstanding. That's a good sign. I love stocks, companies that reduce their outstanding stock volume. From a fundamental perspective, I see companies doing nicely. They do have good 1 week, 2 week, 1 month performance. Stock is down 21%. From a 52-week high. RSI is a little higher, so that's why it's good to wait for a small pullback before you buy the share, given the RSI is a little high. But sales is good, sales growth is nice. I love this. Gross margin is also good, and stock is not expensive. It's just 1.09 price to sales ratio. So even up here, it's good to buy some share here because from a valuation perspective, it's not expensive. And if you look at the institutions don't have too much stake in the company yet. But as you can see here, institutions, I think they are not even buying at this point, but insiders are buying. That's a good sign. And IV percentile is 52.5. So if you're an option buyer, you would not want to buy the option at this time because IV percentile is a little higher. But if the IV percentile still goes higher, you could sell some put options 45 days out. And earnings is a little bit later, 6-7. So you have some time. You can buy some shares, or even I think you have some more time till the earnings comes into picture. So we'll look at one more here, HUYA. HUYA is a Chinese company here. As you can see, a nice looking chart. Stock sold off pretty drastically from $36 all the way to $18. A 50% haircut here. And right now, as you can see, our Bollinger Band is trying to get tighter and tighter. and stock want to go up. RSI is trending up. This is a sign, Bollinger Band is getting tightened up. RSI wants to go up. On the balance volumes tries to stabilize or go up a little bit. That's a tell that this can cause a short squeeze here, and share can go up. And if you look at daily volume here and price and volume, um, we had on Friday stock went up by 4%, nice volume, and I think you can see here it's up and down for most part. But if you look at weekly chart here, stock has sold off so drastically last couple of weeks. It's only natural for the stock to bounce off from these lows. I feel like stock has taken so much beating in last 5 weeks or so. There's a very good chance this can cause some short squeeze. So with that, if you see here, it has got some annual general meeting. People are wondering it's a good time to buy now. I think overall there's some positive sentiment here with stock fallen off so drastically. And from a fundamental perspective, I think they got very nice. 1 week they did 1% higher. 2 week is also positive, but 1 month, quarter, half year, they're down so big. And from a 52-week high, they're down 50%. That's a huge downturn. Nice short ratio here. Institutions are buying it, as you can see here. That's a good sign, and nice sales growth. So with that, with the institutions buying, stock has fallen off so drastically, as you can see here. I think I would be a buyer of this share. This also can cause a short squeeze. And from a institutions, as you can see here, they have a lot of stake in this stock. This share company is making money. There's a positive operating margin, EBITDA margin, and net margin, and also positive earnings per share. They do have some debt, but very less debt. They have a lot of share cash, 1.6 billion. This company is not going under anytime soon. And as you can see here, uh, uh, volume, the implied volatility right now, IV percentile is 28%. So even if you're buying a call option, you can do that. But only caveat here is really there are more puts sold than calls. So people are a little more, they're hedging. They're thinking there may be some more short, some more downturn for this stock. So PC ratio is almost 2% here, which indicates people are a little more cautious. They're buying put options, in this stock. So normally when people are buying so much put options, many times, many seasoned investors, they tend to become contrarian or a counter trend, and they will instead they will buy the stock, so that way they can anticipate some movement higher, because so many people bought put options. If the stock goes higher, all the put options they bought will go waste. So I think it's a good stock to own, and at least this can cause a short squeeze. Next, this is the last stock that we'll look at. It's Insigo. Oops, look at the stock chart here. So bad. It has fallen off so badly. Right now, as you can see here, Bollinger Band is getting tighter and tighter. That's a good sign. RSI is going up, and volume is kind of stable. I think with Bollinger Band getting tighter, stock is showing some upward strength, and RSI is showing some positive strength. I feel like this can cause a short squeeze. Earnings is coming like 5.5. So around the earnings, because stock has fallen off so drastically, you can expect a nice bounce. And if you look at the news here, Insigo and ScanSource form distribution partnership for 5G product. That's the good news. They're announcing earnings. That's okay. They also have some new product here, MiFi 8000. So I think overall these guys are launching products and making some good bets for the future. And I think if you look at the volume here, last couple days, stock is going up, and volume is pretty okay, decent volume. If you look at a weekly chart, I think week of 11th April, 4th April, stock came down, but now they're bouncing off of their lows. I think because stock has gone down so drastically, there is a very good chance any good news in this stock can cause short squeeze, and all these shorts that we have 21%, they can really get burnt. And if you look at the fundamental perspective here, $9.17 on a weekly basis, they've done nicely, but on a month, 2 week, 1 month, and even I think these guys are just down 0.58% from 52 week high, but I think there's a good chance this will go higher. And if you look at here, institutions, a lot of institutions are having, buying the, holding the share. And if you see here, institutions are selling a little bit, which is okay, not too much. And they have a lot of shares available still. Company not making money, EPS is negative, and IV percentile is 43.83. It may be okay to buy call options also, but since the stock price is so low, I would buy the stock outright, and that way you don't need to worry about any time theta decay at all. With that, PC ratio is very low, 0.17. This shows there are a lot more people buying call options than put options, and earnings around the corner. I feel like this is a good one to buy. Very low stock price. There is a good sales growth, as you can see here. Fundamentally sound company, beaten down so hard. I think it's a good one to buy. So with that, thank you very much. Happy trading and investing. Thank you.